Do you want to stay up to date on the Folsom real estate market? Whether you're buying or selling, you don't want to miss these key updates. Let's dive in. This is Anna Kay with Real Broker with my monthly Folsom market update. This week, the median list price in Folsom is $169,000, with the market action index down to 53. This stays in the seller's market zone, but moving towards more balanced market. The median price is up to $869,000 from $799,000 a year ago. The price per square foot is now $373, slightly higher than $365 last month and slightly lower than $388 last April. Inventory increases dramatically, now with 133 active listings from the 99 listings last month. And this is way higher compared to inventory last April of 90 active listings. Number of properties with price decrease also increases dramatically to 40% from 26% last month. Let's compare this to a year ago. Homes are spending an average of 56 days on the market compared to 51 days last year. But the median days on the market is only 21, almost 3 times lower than 53 days in January this year. It is the same as a year ago. What we see is a dynamic spring market. People are home shopping. If you see home you really like, act quick. Everyone is asking me, what is happening to the mortgage rates? Last week brought economic reports that were either stronger or simply less weak than expected. Either way, markets weren't fully prepared. The result? Interest rates moved modestly higher. Rates are closely tied to the bond market, and bonds react to economic data. While earlier in April, attention was diverted by headlines around tariffs, it's clear that economic fundamentals are back in focus. 2 key reports stood out. First, the S&P manufacturing PMI 3 weeks ago suggested renewed strength. Then, last Thursday's ISM manufacturing index showed some components that were noticeably stronger than expected. While not outright strong, the data wasn't weak enough to support lowering rates. Plus, price pressures remain high, which is another negative for interest rates. Markets had been hoping for clear signs that trade uncertainty was dragging down the real economy, something that might have pushed rates lower. But the latest data didn't deliver that. So rates moved higher instead. Things picked up even more on Friday after the release of the monthly job report. Job growth came in above expectations, and the unemployment rate held steady, even more people entering the workforce. The result? A full reversal of rate cut expectations. Rates are now solidly back in the high sixes, a welcome shift from the 7+% levels we briefly saw a few weeks ago. The drop isn't dramatic, but it's meaningful, and it came thanks to market reassurance after some of the bigger concerns around tariffs and global economic risk began to ease. Average market rates, according to Freddie Mac, are 6.76% for 30-year fixed-rate mortgage and 5.89% for 15 years fixed-rate mortgage. If you are looking to buy, getting pre-approved is more important than ever. Rates are changing daily, so make sure you're locked in as soon as possible if you have a good rate. You can message me or visit my website to start the pre-approval process. For sellers, this is a great time to list your home. The active and dynamic spring market and rising prices per square foot means strong demand and the potential for higher offers and multiple offers. Whether you're buying or selling, it is essential to have a solid strategy. Contact me today and let's discuss how to make you competitive in today's market. Thank you for watching, and I'll see you next week in my video about pros and cons of living in Midtown. If you like this video, please share it with your friends and family. I'll see you next week.